Hello, everybody, and welcome to today's webinar, which is called Growing Margins and Edging Out Risk in Food Supply Chains. Before we get into the content, we'll just introduce ourselves to you. So my name is Simon Whatson. I'm a partner at Efficio Consulting. Efficio is a supply chain and procurement consultancy. I've been with the firm for about 9 years, and in that time, I've worked across a number of different sectors, including in food and beverage and retail. And I'm delighted to be joined by Hamish Renton, and I'll hand over to Hamish now to introduce himself.
Thank you, Simon. We are a solely food and drink based consultancy. We're one of the largest in Europe, and we work across supply chain, commercial strategy and insight consulting, and we've done so for about 13 years now. So and we do some work with Efficio. They're our close partners as well. So we're delighted to come in and help out on the webinar.
Thank you very much, Hamish. So I'm going to share my screen now. We've got a couple of slides we want to show. A couple of handsome looking chaps there. So now we've introduced ourselves. In terms of what we want to go through in this webinar, we want to start off by setting the scene a little bit and giving a point of view on where we are, and in particular, how we think the game has changed for food supply chains in recent years. We then want to move on to talk about some of the risks that poses for those companies and organizations that don't manage to keep up. But of course, with risk comes opportunity. And so we want to touch as well upon what some of the forward-thinking organizations are doing and how they're able to capitalize on the change that we're seeing in the sector. And before we get onto the Q&A, we'd also like to share some or discuss some practical steps to not only manage the costs and the risks, but also to grow margins, because whilst it's sometimes tempting to look at these changes through the lens of risk and managing the downside, there's actually a lot of upside to be had here as well, in particular around growing margins. So with that, just maybe, Hamish, let's just summarize a little bit the situation we find ourselves in now. It would be good to get your view on this. I think from where we're sitting, you know, in the last sort of 4 to 5 years, things have changed. I mean, pre-COVID, you know, we had a lot of focus on globalization, you know, not just in the food sector, but also more broadly. You know, companies were chasing lowest cost, even at the expense of some fairly long supply chains. There was just-in-time delivery was something that a lot of organizations were striving for. But when COVID hit, and then since COVID, obviously we've had some geopolitical, let's say, crises as well, whether it's with Russia, Ukraine, or what's happening at the moment in the Middle East. All of a sudden, having a long supply chain and trying to go for the lowest price doesn't seem like the best idea. And certainly we speak to a number of companies who are now trying to, you know, do things like dual source as a way of managing risk. You know, looking at supply partners that are slightly nearer shore or onshore, but potentially coming with higher prices. And really, that's, you know, we're seeing a bit of a shift in how organizations are suddenly looking at their supply chains broadly, but specifically in food and beverage.
No, I'd agree with that. I mean, I've spent 25 years in food and drink, both on the retail sides, Argos, Sainsbury's, and also at Tesco, and the manufacturing and latterly consulting. So I've sort of seen it from every angle. And I would say what you've got at the moment is qualitatively new, in the sense that I think if you take the long view, it's actually quite a fragile system. Because you've got a growing population, you've got climate having a material impact on crop. I mean, one of the reasons there were shortages of certain produce in certain stores in Western Europe last year is because of the North African crop failed. So you're having kind of crop cards are dealing a randomizing factor from climate change. And as you said, you've had COVID flowing into Ukraine, flowing into the Middle East, and then the Red Sea is spilling out of that, which is creating a crunch point that I know we'll come on to. So it's quite a fragile system trying to feed a lot of people and nobody's particularly in control of it. And that creates a fairly tense environment for those of us who are trying to manage aspects of it and our own individual supply chain within the context of this wider system.
Yeah, no, I mean, we'll come on to some of the risks in a minute, like you say, Hamish. But I think what it reminds me of as well is, when we see organizations that are having to make changes to the way that they're thinking about this, the way that they're, perhaps engaging with their partners, the way they're thinking about their supply chains, is that the ones that are best positioned, and this is not a new thing by any stretch of the imagination, are the ones that have actually kind of got their house in order whilst things were perhaps a little bit more stable. And by that I mean, they have maybe considered some of these risks in advance. They've maybe built them into, let's say, category or sourcing strategies. They've managed to clean up their data. They've maybe got good sharing of data with providers. Is that your experience as well? That visibility and having kind of tried to fix the roof a little bit whilst the sun was shining is true here as it is in many other contexts.
Yes, I think that's right. I think there was perhaps pre-COVID, certainly from the retailers, the European retailers' perspective, the longer the supply chain, the better. The more you could stretch it out and find that exact source that would give you that crop or that product at the lowest costs, with a bunch of known transit costs was the right thing to do. So as a manufacturer in that environment, you knew who your customer was, your order pattern was fairly steady, it would tick up by a couple of percent a year in a mature category, and you could have a nice controlled environment. If you have some headroom in that system, then there's the ability to deal with the shocks and off-putting factors that come from all around. If you don't have that headroom, it's really hard because a big shock can send you right off balance, and that could be a real issue.
Yeah, absolutely. So we're dealing with an environment now which is which is changing, and obviously that throws up a lot of risks, like we've mentioned in the intro there, and we've listed a couple of the risks here on this slide, and we can sort of talk over some of these. And I think if I just look at that first one there around kind of contamination, I think one of the things that we have seen in particular in the retail space is where there is, say, contamination in the supply chain, it's having that visibility of knowing what products that's affecting, so that you can properly target your recalls, that you can give your customers the information they need, and these can be extremely expensive if you're not sure where these which products are feeding in to the products that you're selling. So which kind of raw ingredients, which commodities are feeding in, and we've seen that in a few places, and I think some organizations do that very well, but others perhaps less so. And that the costs of getting that wrong can be huge.
Yeah, no, exactly. So top of mind for technical directors, if you like, procurement directors at the moment, is spices. Why spices? Well, if you look at what's happening in the Red Sea for kind of perishables, it's having the big impact. Therefore, there's big shortages and there's big price rises in certain spices. So the temptation is unscrupulous people, effectively adulterate that. So the shortages becomes the driver of fraud. So then you can't rely on the certificates of authentication, because again, there is examples of people literally counterfeiting those. So it's not what it says on the certificate. So you have to then do other systems to combat sort of food fraud. So I think when I talk to people in industry at the moment, particularly in technical, spices is absolutely top of the list. I mean, for instance, ginger has had a huge spike in the last couple of weeks. So anything, a spice mix involving ginger, which is a pretty common spice, curcumin, etc., is absolutely in the crosshairs to say, look, are we getting what we think we're getting for our recipe, and have we got the traceability back to source?
I mean, you mentioned there that people have to then consider alternative kind of systems for traceability. What sort of other systems exist?
So effectively, you've got the systems built at the moment on predominantly third-party audit. So for a supermarket system, yes, they do have their own technical people who will go and audit, classically for own label production. But even that is then outsourced wider system of professionals that audit to those given standards. And all the big FMCGs have their own sort of standards books, signing up to SEDEX and various codes of conduct. So the system's built on third-party audit, predominantly carried out by independent contractors. So really, you can third-party audit your way, but then in reality, you've got a 2-day site inspection once every 365 days. So there has to be other ways of doing that. And principally, you catch food fraud through, boring as it sounds, accountancy. To making sure that what's coming into the factory, are there these sudden swings in variances, sudden swings in working capital or cost of goods sold? Is the throughput of the factory up, but the input to the factory down? Because that's confusing. It's kind of, what exactly are you doing in that factory then if your raw material intake is down? So you can only, the puzzle here is you can only catch it through accountancy in the country of manufacture, but actually getting it through the chain is quite difficult. So you have to trace it back to source, and it's a difficult process. Blockchain's helping, so there's tech is helping in getting there, but it's still not foolproof.
Yeah, and we might come on actually to technology in a little bit more detail later in the webinar. But so you've mentioned blockchain there, obviously a relatively new. I say relatively new. It's been around for a while now, but it's certainly in the last few years it's been one of those things that suddenly had a lot more application, certainly in business. I'd be interested actually to get your view, Hamish, on where you think the food sector is more broadly on technology and in terms of its uptake, and whether it's really kind of, let's say, capitalizing on some of the technologies that are out there that can, perhaps progress some of these processes. And you've just mentioned there that the system really that most people use for these traceability kind of audits, manual audits. How, in your view, how is the food sector performing well in the technology space?
I think it's a mixed bag. So if you look at the retail end, how is food sold? Certainly the adoption of the online delivery model, just in time, deliveries in big cities now within an hour of delivery, the tech in store to guide your decision and prompt you is fantastic. So that's leading edge. In the individual manufacturers, the process technology, so the plant, the equipment, the pasteurizers, the enzymes, the biotech, it's some of the stuff's amazing that we can do with food now. But in the chain and in the supply chain, away from, if you like, the data science of logistics, it is patchy adoption. And I certainly think that AI, for instance, has got a lot further to run in food and drink generally.
Okay. Interesting. Just looking at a couple of other risks on this page that we noted down at one of them here in terms of ESG commitments. And I think, in some sectors, there are some kind of, regulations or at least requirements in terms of ESG commitments that companies need to adhere to. But I think, what a lot of companies also have done recently is try to spin it around also into a positive in terms of the offering to their end customer, their ESG credentials. But you can only really do that, and this actually goes more broader than just food and bev. But obviously, food and bev is it's very pertinent there as well. Is being able to tell a story, and you can only do that if you've actually got visibility and an ability to control and understand what's happening in your supply chain. And I guess for something like food and bev, if you're going to say that you're responsibly sourcing, some of your food, for example, let's say, you want to make sure that prawns are not coming from a boat that's using child labor, for example. And I think that's a real risk when companies are, as a lot of companies do, give positive stories. They need to be able to make sure they can actually back them up and not get caught out with what's actually happening in their supply chain.
I think that's very fair. I mean, there's been some notable examples in the ethical sourcing, fair trade space where really honest pioneering brands like Tony's Chocolonely, for instance, very partial to their dark chocolate, has come unstuck. Typically not in their span of control, but typically a couple of steps removed up the supply chain. Somebody's done something they shouldn't have, or there's been some grey in the system. And you see that with folk like Brewdog again, where there's been a lot of claim made, and then this is happening over here, a sort of separate issue, and then that certification is stripped away because of that. So it's managing, I think the day job is managing the downside risk, so you're not falling foul of any of the voluntary codes of conduct. Obviously, the legal ones are taken as regulatory as read, but signed up to a FSC or MSC if you're in the marine sector, whatever it is. If you signed up to that, you need to do that, and then it's the upside. How much do you want to claim and put your head above the parapet? Really reflects how secure you are in managing your supply chain. If you have that bandwidth, you're working with trusted partners, I would say you ought to let the ropes out a little bit and put it up there. But that risk will always be there, that the further you are transparent and public about what you're doing, that risk could come back to bite you. It's just a fact of doing business.
Exactly. And I mean, these days as well, with the with the way that things are reported, and companies are often very active on things like social media, the slightest opportunity to for a company to score an own goal, it can be quite costly in terms of its PR and its image. So it's something that is key for companies to manage. I'm just also looking at another couple of points on this, Hamish, and it would be good to get your view on a couple of these too. I mean, financial monitoring of suppliers will not be new to anybody, and it's certainly not specific to the food and bev sector. But I think there is, and we certainly see this more broadly, that there is sometimes a complacency around the financial performance of some suppliers, in particular with some of the shocks that have gone on. Understanding how exposed you are, for example, to a supplier, getting into difficulty, understanding how much of their business you make up, and understanding whether you'd actually be able to have continuity of supply should something happen. We still see some organizations, and in particular sometimes in the food and bev sector, where they've still got let's say single source, which is not in itself a bad thing, but if you're going to have a single source, you need to make sure that you're doing proper financial and sort of operational monitoring of those partners. I don't know whether you have some additional thoughts on that as a point.
Yeah, I think the predilection was for sole supply, because sole supply, you can exchange your entire contract, you can drive specification, you can fill an entire factory if you want to, and you're big enough. So you can literally get what you want at the best economic cost. You can have a very close enmeshment. You can lock everybody else out if there's differentiation in the product. And you can really build a bespoke supply chain. So historically, a lot of FMCGs wanted to work upstream in that way, and then be able to give a branded product, a uniform product into all the channels in all the markets that they serve, particularly in Western Europe. Now, I think there's a much more of a concern about, if you like, dual supply, and really the contingency that gives you. Now, clearly with dual supply, it's more costly to manage, there's more legals, it's just more complexity in the system. You can't drive as good a bargain on cost because you're only giving a third, half, 60% of your volume rather than 100%. But I think there's a recognition that contingency is really useful at times, particularly as we've talked about in primary ag and primary food, where climate can serve a curveball, and you need to have contingency of crops. Otherwise, there's going to be gaps on the shelves, and people won't understand why there's gaps on the shelves, and they just won't. So I think the fashion is to do that, and in order to do that, supply chain departments, procurement departments need the bandwidth to manage a couple of contracts per category now. Whereas before, you might perhaps have one supplier, and every 3 years you rotated and market tested. Now you need a couple. You always need one in reserve. So it's a more complicated beast to manage. Yeah,
that makes a lot of sense. And maybe just the last point on here, which is very topical at the moment. Obviously, there's obviously through the conflict in the Middle East, there have been attacks on some of the kind of commercial shipping that's going through there, which is obviously a very, very important shipping route, and that can lead to severe shortages, at least in the short term, of product arriving on shelves, and really kind of bringing home the implication to a lot of people of what's going on in the Middle East. And I think we've actually even got a little bit of a case study here. It'd be interesting to get your views on this one.
Yeah, so kind of how can something 6,000 kilometers away, affect whether a kiwi fruit in Benidorm is soggy or not? And the answer is incredibly easily, because there's a fixed number of ships that there is. You can't manufacture them quickly. And that availability of shipping combined with a backlog means that there's, the cost of shipping is going through the roof. So the cost is soaring and people are paying 5-10 times more for shipping. It's also got to go around the Cape of Good Horn. And if you've got a perishable crop, I mean, particularly think about sort of citrus and kiwi, it ripens really quickly. So another week means it's arriving. So it's a real challenge. I think that's manifesting at the moment in price increases, not availability shortages. But it won't take too long before that gets out of sort. And of course, if the price of the product here, the demand drops, and then when things normalize, there's normally a glut. So it's not just the price impact and the logistics problem. You've got to then brace yourself for a demand shortfall before things normalize. So it's very difficult for folks in those areas. And kiwis come from, particularly Southeast Asia and New Zealand, which of course is most affected by Suez.
Yeah. So reassure us, are we gonna have to remove them from the fruit salad, or do you think we're gonna?
I think if you're happy to shell out top dollar, then it's all good.
Very good. Okay, so let's flick it a little bit and think more positively and look forwards and talk about some of the opportunities and how some of the forward-thinking organizations are capitalizing. One of the things I think we've already spoken about a little bit is around the kind of headroom in the supply chain function. I think it comes back to the point we made at the beginning around, organizations that generally have their house in order. They understand where their products are coming from. They understand how much they're paying from them. They understand their contracts. They've got good, robust category strategies in place. As you say, Hamish, they have more the kind of the headroom, the headspace to then deal with the changes that come along. Unless you've got anything more to say on that one, maybe you can give us a flavour on a couple of the others. Whether maybe the outsourcing piece, kind of contract manufacturing sort of area. Give us your thoughts on some of these opportunities.
And they all really link to that notion that you've tabled there of bandwidth, really, because sort of scope 3, I mean, I'll give you a dairy example, for instance. I mean, you're a big European dairy co-op in, let's say, one of the heartland countries in Europe. And historically, the way you've thought about carbon emissions has been, I'm responsible for what goes on in my farms with my member farmers, and I'm responsible for what goes on in my factory. So with my farms, I'm going to put, regenerative practices on farm. I'm going to look into animal feed. I'm going to look at biogas, perhaps as a transport option. I'm going to perhaps look at biofuels for my boilers in my factories. I can do these things in these two worlds of milk, if you like, farming, collection, and processing. That's what I can do. I can then look at packaging materials, substrates, looking at rPET rather than PEG, etc. But with scope 3, you then have to look pre-farm at your animal feed. So what's the structure and what's the system that's producing the animal feed, the linseed, the millet, if it's pork farming, etc. And then you have to look downstream about what the retailer and your channels are doing with your product once you've loaded it, X works. So scope 3, if you don't have that bandwidth, it's very, very challenging. And of course, the commercial side to that is a lot of contracts at the moment, particularly the very big global retailers. They're placing global contracts. And if you're in a market that has a scope 3 requirement that's part of a global contract, that raises the bar, that raises the specification. So you need a scope 3 declaration, just if one of those markets is included, or you can't pitch for that global tender. And you'll have to say, no, thank you very much, I can't do it.
Yeah.
So if you don't have that bandwidth in supply chain, it will
Yeah.
stop you selling those global tenders. So you have to have the flexibility to see this coming down the track,
Mm.
deal with it, in order that you can continue to do what you're doing at the moment.
Yeah. Yeah, that makes a lot of sense. And another point we've got on this slide as well is around demand and forecasting demand. And I think one of the things that we see, particularly when we work with supermarkets, is their kind of S&OP processes. While some have good S&OP processes, there is still, when we look at compare them to other sectors, I think there's still an opportunity for firms to be better at predicting demand, even for things that are that are perishable. And again, I'm not sure what you see from your point of view there, Hamish, but companies that can predict demand, there's a lot of margin possibility there for those companies that understand the demand and are able to run their operations accordingly.
No, I agree. And to be fair to retail in particular, these are very complicated micro businesses. I mean, you think
Yeah.
about a standard European store, 25,000 SKUs in that store. So 25,000 different products across 3 temperature regimes, so sort of frozen, chilled, and ambient. And that's before you've got into some of its toys and clothing and other categories. So there's a lot of complexity. It all needs a replenishment cycle. It all sells at different rates, and it needs to be treated differently through the chain. Some of it you can chuck around in the storeroom, the other one's made of glass. So literally you have to have special protocols for handling. So it is hard. That said, there's a lot of way. And again, I think the new recruits that are coming into supply chain from a data science background are probably better placed to help the retailers in particular to up their game on S&OP and in turn help the FMCGs supply into that environment, because it's that environment, it's the interface between the two that will make for a nice availability, kind of progressive, understood, and if you like, predictable demand.
Yeah. Good. I'm just conscious of the time. We wanted to leave some time for questions and answers at the end. So, is there anything more you wanted to highlight on this slide, Hamish? If not, I think we'll move on to maybe some of the practical steps, and then we can get into
Yeah,
the Q&A.
just a very quick point about outsourcing. So
Yeah, please.
I'm seeing from the retail side, the category buying teams being supported by third party, if you like, supply chain experts.
Yeah.
And I'm seeing the same thing on the manufacturing side, where people are saying, I don't have that bandwidth. I've got everybody on the tools, working with factories, interfacing. So I'm seeing more outsourcing and more third party assistance in, if you like, the setting of strategy than I've ever seen before.
Yeah.
Sometimes organizations were quite closed and say, this is our procurement function, this is what we do. But now there's an openness and a willingness to, the complexity is so much, there's so much changing, I need help. So
I agree, and we see that actually more broadly than just the food and bev sector. And I think it's not just a resource org point. I think it's also, or an expertise point. I think it's a kind of flexibility point as well, around having a workforce that is able to flex up and down depending on the demand that's being placed on it. And we see that across a number of different sectors, that, as you say, organizations are becoming more open to collaborating. And I think they're really beginning to see or at least there's more value to be had there.
Yes.
In working with an operating model like that. Good. So let me just flick on here for presentation response. We've got some steps here to be sort of to make this practical. I think some of these we've already talked about. Obviously, we've spoken about the very basic thing, and I think most organizations will have this already. But at a very basic level, having category strategies and proper robust risk assessments in place for the key commodities and categories. Secondly, systems and technology. I think, Hamish, you've given a good view there on how some technology can be leveraged. I mean, you mentioned the SEDEX, for example, system, which helps to provide visibility of risk down at a supply level. We've talked a bit about improving S&OP processes, in particular around forecasting demand, and you've given, I think, you've given some good insight on that too. I suppose for UK-based companies, Brexit is still a theme, and obviously we're sort of very slowly Brexiting in some cases. Regulations are ceasing to apply to the UK, and that's the case as well, in some of the food and bev stuff. So there are a lot of practical steps organisations can take. Do you have a view on any of those, Hamish, that you want to just emphasize?
Yeah, I would just say a dynamic risk assessment in the current environment has got to be a must. And I think the temptation is, well, we've done it, we'll come back to it next January because I've got all this
Yeah,
other stuff. And a risk assessment never shouts at you, it never does anything until it's too late.
yeah,
So I think I think at least a quarterly review of that, and particularly in the environment at the moment, is mandatory, I think. And then, yeah, I don't really want to comment on Brexit. There's been so much said about it, but all I would say is, even at the level of generating some samples and getting them to a customer, it
yeah,
appears easier to put a man on the face of Mars than it is to submit a small package of samples from, say, Central Europe to the UK and vice versa. However many years later since Brexit. So it's an ongoing impediment to trade.
yeah,
Whether people want to admit it or not, everybody knows that it is. I think that's a fact, regardless of your politics on Brexit.
yeah, yeah. Of course, yeah. Definitely not passing any political comment there, on Brexit. I think that argument's been well run. So we're going to begin answering some questions. So as a reminder, you can still submit questions. You just have to click on the Q&A in your attendee control panel. And you can type in your question there, and we will endeavour to answer it. We've actually got a couple of questions in already. One of them, actually, it's a point actually, Hamish, we've not dealt with at all, which is around inflation. So it's two parts to this one. What's the outlook for inflation in food and bev, and what tips do you have around managing margins in an inflationary environment? Do you want to take that one?
Perfect. So I mean, anybody who's been involved in food and drink the last 18 months has seen this completely once in a generation focus on cost price increases, mitigating them when they come in, and then getting them back from the market, and the customers you serve. So we've seen that start to dip, in fact, and there started to be a bit of downward pressure, and people, putting calls in and saying, look, can we share some of these gains now? Your costs are falling, which is only natural. But I think what you're starting to see, and we were seeing it at the tail end of last year with the divergence, and some categories were continuing to grow for various reasons because their inputs were going higher. Some categories indeed were coming off. So you sort of had a crossing over of the lines. What Suez and the Red Sea has done is, I think, draw a third line in that general architecture, which is products that are principally perishables coming from the Far East, Australia, New Zealand, are having this sort of temporary spike. I say temporary because I'm an optimist and I figure we might get, some sort of resolution to the Middle East issue fairly soon.
Yeah.
But if it's not right, then you're going to get effectively around half of all perishables, I think, will start to trend up. And I think the rest of them will probably flatline, whereas other goods may come down. So the inflationary mixture will be quite confusing to the untutored eye, in fact.
Yeah.
And the only way to mitigate that is to have a relentless focus on cost price increases at one end, securing those with the market, with your customers, with the appropriate notice, and also trying to mitigate, trying to understand, and trying to plan to keep your cost increases coming in. And just a reminder, you do need that continuity of supply. So you will have to give an increase sometimes before you get an increase, but bake it in and go for a larger amount at that end.
Yeah. And also one of the things that we see, it's very linked to this point, is, even when there's a deflationary environment, there's also a lot of work to be done, in particular for the retailers, in terms of getting on top of that downward curve. Suppliers to retail are often understandably quite quick to increase prices when there is inflation, and there has been an unprecedented amount of inflation over the last couple of years, of the type that's not been seen before, because it was across almost all commodities. But then as some of those indices peak and prices start to go down again, it's really important for retailers to really get on top and chase that curve back down. But it's actually very difficult to do unless you've got really good visibility of which commodities are feeding into the products that you're buying, and what the cost breakdown is, because otherwise it becomes a case of just asking for a price decrease in a very generalist kind of way. Whereas if you're able to understand how much each of the indices is feeding in, and therefore being able to do a kind of should cost analysis for negotiating, then it's much more effective. And we see some retailers doing that very well, and others doing it less well. And I think the key point there as well is timing, because even if you're 3 months late, let's say, that's 3 months of margin that's lost and can never be recovered. So it's a key point.
No, I would agree. And if you think about the direction of travel within the retailer, the buying areas have got bigger, and on average, the buyers have got younger. So you have slightly less experienced people dealing with a bigger area with less layers. So the odds on any individual buyer really truly knowing the category dynamics at a raw material level lengthen. There are very good buyers out there and some very good operators. But the average buyer, I think, is a bigger span of control, less time, and less detailed knowledge about those individual price architectures. So they are more likely to rely on a generic request for lower prices than a specific request. The retailers do have sort of data teams, but of course they're overworked in particular. They're geared up to normal trading, and no retailer wants to put in that cost. And from the manufacturer side, again, they can be blindsided by raw material moves as well. So I think there's trust in that chain, and wanting to do the right thing, and negotiation will continue to be part of it.
And actually, another question we've got here, which is quite a good segue. So you mentioned data science in the presentation. How much, to what extent do you see data science playing a role in food and beverage?
No, it's a great question. So when I cut my teeth in food and drink, this is going to carbon date me, in the 90s, the archetype of the supply chain manager, the procurement manager, really was a kind of mirror of the sales guy, the commercial guy. So they really were both commercial animals. One was focused on buying materials, goods, services. The other one was focused on getting the highest price for whatever the factories produced. So but they were, to a certain extent, negotiators. They were managers. They were relational people. They were the qualities you wanted, which are pretty similar, actually, different amounts. And the best buyers could put their suppliers at ease and get the best out of them, and vice versa. But now, if you look at the archetypes of what's going into the big FMCGs and the procurement functions, the supply chain functions, they're recruiting, maths grads, they're recruiting stats experts, kind of computer scientists, because that's what they need from the future for these predictive models. Because I think it's a recognition that, as I started this whole discussion, this system's too fragile, too complicated, there are too many variables for any one person or group to fully understand. We have to lean into AI. And the adoption of AI has been patchy. Therefore, you want to be one of these companies that's with the program and experimenting and using it alongside a commercial approach.
Yeah, and actually, maybe just I'll permit myself a question there. You mentioned AI, Hamish. What's the take up been in food and bev in your experience in the sector?
I think it's been very much confined so far to the skunk works. There's a lot of what the industry sort of describes as the sort of AI bros on LinkedIn giving treatsies. There's been a lot of at the marketing end, a lot of content now is AI driven on behalf of brands and firms and organizations. Has there been a lot of predictive analytical heavy lifting done? I don't think so. And I certainly haven't seen AI working. People are puzzled by it, intrigued by it. mesmerized by it in some cases, but the adoption's been quite low. And I think that's talent led, that we haven't got within the food industry in Europe and the UK enough of a talent pool to really help us apply it to this sector yet.
Okay.
It's probably, because it is food and drink and it's about physical movement, it's probably going to be a later adopter as an industry of AI. I would say middle of the pack, not laggard, not an early adopter, but in the middle. So I think it's yet to come. We can all see the wave out to sea, but we've yet to see it break on the beach.
Sure. So there is another question. So we've got about 3 minutes left. So Hamish, if you wouldn't mind keeping your answer to this one to about a minute or so. You've just mentioned young talent there. Do you see? So this question is: do you see graduates coming through showing interest in the food and beverage sector as a career path?
Yes, I do. And I mean, my N equals 1 and the clients that we work with, but people like to work with food. I think young people are increasingly curious about what food is, where it comes from. This is an Instagrammable world. They're all part-time chefs. They geek out about a lot of this stuff. So food and drink as a sector is getting more popular because it's something that they can connect with in a digital world, because it's a physical product. And many of our issues come together in food, in terms of equity, fairness, ethics, etc.
No, food is a great unifier. There's no doubt about that. Perfect. Well, listen, we've come up at time there. So first, Hamish, thank you ever so much for joining us on this webinar and being such a great panelist. Thank you to everybody else who's attended the webinar. Just as a reminder, you will receive a follow-up email in the next 24 to 48 hours. With a link to view a recording of today's webinar if you want to rewatch it. So thank you very much for joining us and enjoy the rest of your day. Bye-bye.
Thank you.